Hello and welcome to Morningstar. Investors love thematic funds. These strategies have expanded rapidly in recent years. But what are the themes to focus on for 2023 and beyond? To answer this question and others, today I'm joined by Rahul Bhushan, co-founder of Rize ETF. So, Rahul, the pandemic was a turning point for thematic investing somehow. Can we say the same for the outbreak of the war in Ukraine? And more broadly, how has the thematic fund market changed in the last 3 years?
So the answer to your first question is yes. The pandemic, as hit us at the last stretch of what's arguably one of the longest bull markets in history on record. This was a bull market that was led by digitization, technology stocks for the most part, and disruptive innovation, if you want to use a catch-all term. And I liken it, a little bit to this sort of last stretch of a marathon. We basically tend to, if you're running a marathon, last 200-300 meters, you look around, and if there's people nearby you, you really accelerate for that last hurdle. And I think COVID gave the same kind of impetus to a lot of these digitization stocks as we transitioned to work from home. We saw the NASDAQ rally, the tech sector rally. We saw disruptive innovation again, rally. What's changed in the last 18 months is we've had a war in Ukraine and the rise of an increasingly complex geopolitical landscape, and the rise of a more fundamentally autarkical blocks and regions around the world, from the US and Europe to China, and it looks increasingly like Japan and Australia as well. And all of these things have kind of served to be quite inflationary and could stay inflationary, even as interest rates normalize. And I think in this environment, what we're witnessing, or at least what we've been seeing, is this sort of natural evolution in thematic investing. But this isn't, because thematic investing isn't fit for purpose or anything like that. I think it's because clients are driving demand for a different type of theme, a different style of thematic investing. And for example, we're clearly now in the green transition super cycle, and that tide, we believe, won't raise all so-called green stocks equally. So there's an onus on providers to really help clients identify companies that are best exposed to the transition. So we've had the decade of digital disruption, which finished sort of in 2021, a proper inflection year in 2022, and then now we're beginning this new super cycle in environmental equities that will be powered, we believe, by a lot of catalytic government initiatives.
Right, that's very interesting. And of course, we saw a proliferation of thematic strategies over the last few years, offering a vast array of choice. The one in the spotlight right now, you said it yourself, is definitely the energy transition, for obvious reasons, of course. What is your take on that? Do you think this is going to be the main focus of the market for some time, or do you see something else?
So for the foreseeable future, yes, but we would probably say that it's not the only thing that's going to be in focus. The way that we sort of analyze this is we look at the residual effects of the pandemic and the war. And, if you sort of think about the pandemic, what's happened in the aftermath, we've had labor shortages. We've seen the rise of mRNA vaccines, their use and the acceleration of their use. We've seen, damage caused as well. And this is quite disheartening, is the damage lockdowns, did to our children's learning. And then with the war, we've seen everything from food and fertilizer insecurity to supply chain disruption and general, mismanagement. And we believe that these are things that are going to give rise not just to, the green transition tailwinds, but also other thematic, more traditional thematic tailwinds in the months ahead, as well as accelerate existing ones, right? The big conversation currently is really around AI and the ability of AI to act as a productivity enhancer. And this is likely to have a big impact on enterprise software companies, for example, many of whom I think, or we think, generally might go to zero, but there will also be a a new subset of multi-decade winners, aside from the obvious ones, Microsoft and Google, etc. But a lot of value as a result of this is going to be placed on things like data sets, for example.
Right. Finally, of course, you are an important issuer of thematic ETFs. What is the process that leads you to issue a certain type of thematic ETF? For instance, how do you pick the theme? And once the theme has been chosen, what are the main rules you follow to build the portfolio?
Yeah, so the first thing to note is our process is fundamentally research driven. So we definitely see ourselves as a thematic research house, and then a thematic index creator, and then an ETF development house. So in that order. What you probably picked out there as well is, we build our own indices. So we don't tend to, we've never licensed, an external third-party index. And so our research is the way we do our research, the way we conduct it, it's typically done in partnership with external research organizations outside of the finance industry. So research organizations that we've had relationships with because we've been doing this for so long, or new ones who we've identified to have the technical expertise in the relevant theme that we're trying to study and ultimately build an index and ETF around. And there's three things we like to see evidence of. One is there needs to be an industry CAGR, a growth rate for the industry that is high enough to be unignorable, let's say. Two is the ability to actually play the theme in publicly listed stocks. There's a lot of abstract themes in the market today, which, even Morningstar has written about, themes like, the metaverse. And the truth is, it's hard with these abstract themes to really identify and select companies that are meaningfully exposed. How do you quantify the exposure of a company to metaverse? It's not easy. And so the resulting reality is that not all themes that are exciting are necessarily investable. And even out of those that are exciting and investable, not all of those are investable or should be invested in right now. And the final thing we look for really is liquidity. We want to make sure that when we're building a thematic fund, there is ample liquidity in the underlying stocks. We do see a lot of ETFs, thematic ETFs launching that pay little attention to the finer details when it comes to liquidity, especially those that are licensed externally, because the investment management expertise hasn't really been considered in many cases, and index providers don't tend to have investment management capabilities. So as we build our own indices, and given we have the IM expertise in house, we can solve for that challenge really early in the development process. So those are the things we look for. And then ultimately for the index, it's just about creating a rules-based strategy that, seeks to maximize revenue purity to the relevant theme, which is something we take quite seriously. And if we're building a sustainability or an impact fund, what we're really trying to solve for is the maximization of net positive environmental impact. For example, we have an environmental impact thematic, and that's precisely what we're doing in that fund.
Rahul, thank you so much for your time. For Morningstar, I'm Valerio Baselli. Thanks for watching.